Welcome to the Decent Crypto Podcast. Today is March 4th and we are back. We're live from New York City. I'm here with Matthew Blumberg in person from our studio. Matt, how you doing?
We are back. We are so back.
We are so back, baby. The market is not back, but we are back. We're here in New York. Both of us just came back from Denver. It's a good week. It's a pretty bullish conference.
Yeah.
Again, not for the actual prices of our bags, but the energy is bullish. Real quick, let's do 45 seconds. Matt, how was your experience at ETH Denver?
There were so many fucking people there. It was absolutely wild. I heard something like 20 to 25,000, which last year we thought it was crazy because there were 13,000. And at that point, like the price of ETH was like $4,000, right? Very, very bullish ETH Denver experience. A lot of people building, a lot of people excited about the future, a lot of people in the community. The lines were around the corner for just about everything. Even like the side events were like full on like conferences, like the Axelar conference, right? The Interop conference.
Yeah.
They had like 10,000 people there.
Did not feel like a bear market at all. Tons of people just out there saying we have money to deploy. A lot of, you saw a lot of VCs there. You saw a lot of people still hiring. Just the energy was pretty insane. Yeah. All right. Well, yeah, people are not here for ETH Denver recap. It's still going, I guess.
Yeah. If you're listening to this, you still have 24 hours.
Yeah. There will be plenty of ETH Denver recap podcasts talking about what everyone's talking about. Actually, like real quick, what are the main themes you saw?
The main themes, okay. Cross chain, right? But primarily from a Cosmos context. Big theme.
What do you mean? Like just like more chains that are building on Cosmos and like IBC enabled and that kind of stuff, or
yeah, like IBC enabling of just like cross chain messaging, but also like cross chain like shared security. So a lot of talk around things like EigenLayer. I talked to someone who's trying to use Bitcoin security to secure Cosmos chains, which is kind of interesting.
Huh. Is that Babylon chain?
Yeah, Babylon.
Yeah. I saw this.
Yeah, but yeah, it just felt like app chains or like smaller, more modular chains in general are becoming a bigger deal. And then from there, also layer 2s were just a huge talk of the town this year. Obviously, Polygon ZK VM, let's go, launching March 27th. We've got like ZK Sync and Scroll not far behind. We've got Coinbase's base chain built on the OP stack. We have the OP stack as an ecosystem. Just like a lot of talk around like taking the block space and producing it in alternative places, and then using secure methods to get information or assets like to other places. Yeah,
a lot of these like interchain messaging protocols. Everybody's talking about Arbitrum right now as well. Arbitrum is popping off, like Gains Network, and what's the other like leverage trading?
GMX.
GMX is huge. Arbitrum generally people are talking about.
Have you heard of Mummy Finance?
No, what is that?
Someone showed me on Mummy Finance the other day, and he was right. Every day it's up like exactly like 6 to 7%, and it's a phantom fork of GMX.
Oh, interesting.
And it's forked down to the UI, so like you go on, and it feels exactly like you're interacting with GMX. Nice. For all that liquidity stuck on Phantom. RIP.
Not a bad play. GMX has good tokenomics.
Yeah, it sure does.
Yeah,
I don't know. What do you think? Tokenization, a huge...
Oh, yeah, tokenization, real-world assets.
Tokenization, real-world assets, institutional DeFi. I had like a bunch of conversations.
What does that mean, institutional DeFi?
They're not really sure yet. We know what model doesn't work, which is Aave Arc, which I want to say... do you remember Aave Arc?
No.
It was the Aave like institutional permission DeFi platform.
Oh,
for like borrow lend among institutions.
Right.
They had like 40 or 50 like real world class partners that they launched with, and last I heard, it had like less than like 20 grand of liquidity on it.
Oh my god! Wait, why was it so weak?
I think that's not a product anyone wants.
Okay.
Yeah, everyone will tell you the same thing. They'll all say it was the execution was not good. I don't think that's actually it. I think in like because like institutions will find a way, you know, like, and a lot of these institutions that were signed up are like crypto native people that like if the if the back end provided them a useful service, they would have found a way around the implementation of the front end. I think the bigger issue is just like if you're an institution trying to lend money to another institution, like you're just gonna pick up your phone. You're not gonna like bother with like creating the assets through Circle and then like lending them on chain and like
you have the infrastructure in place already to do that.
Yeah, like you know, like we talk a lot about the user interface problem in Web3, and you know, for a lot of people, like the other option is like open your browser, like you know, Lens protocol versus like open your browser and go to Instagram or whatever, right? Like imagine how much bigger that hurdle is for things like multi-sigs and like safe like issuance of like stable coins and like versus like literally picking up your phone. So we're not there yet, but I've heard people talking about now that the Uniswap v3 what do you call it, like there's a period of time where you're not allowed to use it. It's like a copyright almost.
Okay.
The license is expiring, and so so Uni v3 has been like fully controlled by the Uniswap Foundation since like it was released like a year plus ago.
So it's not open source or anything?
It's like it's open source, but it's not like licensable.
So you can't use it for commercial purposes. You can only use it as like a toy.
Yeah, exactly. And this is why like Uniswap recently launched on BSC. And I don't know if you saw the drama around like which bridge they were going to use. They have to use a bridge to count votes from other chains, like if they're going to bridge the Uni
for governance and all that.
Yeah. And to deploy contract upgrades and whatever. And there was a huge. You didn't see any of this drama?
No.
It was nuts. Okay, so like the options are Wormhole or Layer 0.
Okay. Only those two.
Those are the two that are up for vote. Yeah. Which already feels pretty VC heavy.
Yeah. I was gonna say, okay, there's a few other options out there too.
Yeah. Yeah. So the community gets together and they vote for Wormhole.
Okay.
And then they hold another round of voting because not enough like tokens voted. And A16Z owns so much fucking Uni token that they like single-handedly flipped the vote to support Layer 0.
Amazing.
And interestingly, so a lot of VCs have done something where they delegate the votes of their tokens to like a third party. And like, so everybody that's doing this on-chain governance basically forked the Compound code base for doing it.
Yeah.
And it includes delegation like natively.
Okay.
And this is for things like hot wallets, right? So you don't want to have like you don't want to have like your wallet that actually holds all the Uni. Like
you don't want to keep having to sign for every single like governance vote and like
those keys are meant to be like really cold.
Yeah.
Right? And so what they did was a lot of them delegated to things like university groups, like blockchain at Berkeley, or blockchain at Columbia, or whatever. And those groups voted generally for Wormhole. And so A16Z actually delegated a lot of their token votes to these groups, and then voted directly against it to support because they have an investment in Layer 0. And so it sparked a lot of talk around like, how should you be thinking about DAO voting? Like,
on-chain governance is a questionable concept from the beginning. But, so what? Like, did that go through? Was that okay?
Yeah, it looks like Layer 0 took the vote on that one. Anyway, so they deployed on BSC, but that was the only way that Uni v3 could get there. And so now that Uni v3's license is coming up, there's a lot of people talking about trying to fork it and use it in an institutional context, which just sounds
like, what does that mean? Yeah,
like try to lock it down, permission the pools, permission the swaps.
Okay, I see.
And I don't know. I mean, it's an interesting one because it does use this, like, we've been talking a lot about, instant settlement being like an advantage of using blockchains for institutions versus like T+2 in the stock market.
Yeah.
And I'm sure in a lot of like I've heard in like foreign exchange, for example, settlement can actually be a huge headache. And I'm sure there's a lot of asset classes where that's true. But in the equities markets, it's actually good to have T+2 settlement because like if you don't have to settle instantly, that's much more capital efficient, right? You can buy shit without posting capital. You can sell shit without like actually, needing to get the capital from other people.
Yeah.
And so everybody makes more money because it allows for more leverage in the system, even if it's on like a rolling T+2 basis.
Yeah.
So,
so that's kind of what the institutional DeFi narrative is right now. It's like these permission chains, versions of apps that are live right now.
Yeah, and then tokenized like real world assets. Yeah,
okay. Interesting.
Feels like that's popular in every bear market, right? Like, the tokens aren't going up anymore. What else could we put on chain?
Everything.
The whole world.
Yeah. Okay. Yeah, I definitely saw a lot of that. I saw a lot of ZK.
A lot of ZK.
Interest. Yeah. I mean, obviously, the first one will be Polygon, right, on mainnet.
Yeah, you've seen the Spider-Man meme where it's like first ZK
everyone's
VM,
first one. Yeah.
But ZK Sync, I think, is like the closest contender, but I still don't think they have proofs. It's a little bit like Optimism, where they don't have fraud proofs either.
Yeah, but everybody looks at that as like a live layer 2 that's
like production ready. Yeah. So yeah, I think Polygon will be first, and got some cool stuff launching on there. So that's very exciting.
Okay. All right, nice. Anything else from East Denver?
Just one other thing, which is that folks, Denver is at high altitude. Don't drink as much as you would at sea level. I've seen many people fall victim to this. As a Denverite myself, I know what to do and what to avoid. But even if you're not at ETH Denver right now, just keep in mind that like Monday, for example, there's going to be a lot of people that are still pretty hungover from Saturday night. So be kind to one another.
Yes. Be nice to your coworkers on Monday. Okay, Matt, couple things. Our recap is going to be short this week. Well, first, the market is nuking. It seems like it's because of Silvergate, right?
Yeah, it seems like it's because of Silvergate.
So what's the scene here with Silvergate?
So public company, right?
Silvergate's a bank. They're a bank that generally, from the beginning, has been supporting crypto companies.
Yeah.
They are one of the biggest banks, at least in the U.S., for crypto companies.
Yeah, it's like Silvergate and like
Signature
Bank of New York, SBNY.
Yeah.
And I remember this because like back in the equity market days when I was trying to get everybody invested into the crypto adjacent world, there aren't that many public companies you can buy. So there's Coinbase, there's Silvergate, and then there's SBNY. And there was supposed to be Circle as well through a SPAC, but it never quite panned out. Anyway, these stocks went ham, absolutely crazy during 2021, right? Crypto was going to be the future, and they were like the picks and shovels, right?
Yeah. What about these Bitcoin mining stocks? You couldn't buy those?
You could buy Bitcoin mining stocks. Generally, it was too far up down the risk curve to buy them. And this is really interesting. So I was listening to a good episode of Bell Curve yesterday where they're doing the recap. And one of the guys was like, look, man, picks and shovels, those sorts of like companies are like catnip to growth investors, right? Like I know so many people that are down so bad because they bought Coinbase stock, they bought Silvergate stock, they bought SPNY stock. I mean, Silvergate, you're literally to zero now, effectively.
Yeah.
If you had just bought Bitcoin or like a Bitcoin mining company, depending on the one, some of them did go bankrupt, then you would have been much better off than buying these picks and shovels names.
Yeah.
And that's the reason why, like, I don't hold any equities, but it's for that reason, right? That like I want to realize the like super crazy upside from this super volatile asset. And the downside is like not going to be that much worse than a centralized company that's providing services.
Well, it depends which coin you bought. But yeah, with Bitcoin is true. It's like Bitcoin is now acting relatively stable.
Yeah.
You know, like the downside is bad, but it's not like you're not seeing the 90%, 95% drawdowns. And compared to, yeah, like you said, like Coinbase stock from the peak is down 90%, or it did go down 90%. Whereas Bitcoin from the peak went down, what, 75%, 80%. So, yeah, I agree with you there.
Okay, so Silvergate. Let's
Yeah,
get
I was
into
going to
it.
say, what exactly happened here? You said it went to zero.
Well, it should be pretty close there. It might be like Luna, where it never goes exactly to zero, and maybe
Luna's
even
coming
bumps.
back.
So Silvergate, as a bank, right? Like their job is to take deposits and buy like slightly longer dated investments with them, right? So they pay you in your savings account a certain interest rate. They earn a certain interest rate. They pocket the difference, right? And back in the 60s, I think they called it the 363 model, where it's like you pay 3% interest, you earn 6% interest, you're on the golf course by 3. 363.
Okay.
So Silvergate, they had like a duration mismatch, right? So they bought a lot of like relatively long dated bonds, and then if there's a run on the bank, right, like they just don't have that liquidity available, especially because the last 2 years have been maybe the worst years for bonds. I think I heard a stat in like hundreds of years. This was the worst couple of years for bonds. So because rates go up, and then the existing bond that has like the old rate of return gets absolutely wrecked. It's like worthless by comparison. And so they're down bad on their bags. Their investments are yielding, but not much, and they're also having to like pay out like depositors, right, at like a competitive rate with the other banks in the world.
Yeah.
And so there have been rumors of Silvergate like having like financial like health problems since time immemorial, but really over the last like month or two, this has become a louder narrative. And so they finally had a bank run and effectively faced like insolvency.
Okay.
And then they were supposed to release their 10K, like their like annual report, and they just like didn't.
Oh. Huh.
And so Wall Street really doesn't like that. And so the stock was down like 45% or something. And then I want to say there's been like more confirmation that like they don't have enough like assets to meet their liabilities. And we'll likely need a bailout. Now, the one nice thing though is that when it comes to banks that have banking licenses and like FDIC insurance, they actually can get a bailout versus like a crypto like startup or
But they won't get bailed out for everything, will they?
No, I don't think like stockholders will get any equity out. I think it's just like investors or like depositors will get like 250K or whatever. And,
right.
So like
that actually doesn't help too many people though, because most people were not banking directly with Silvergate. It was the exchanges that were banking with Silvergate or other crypto companies, and then clients would then be customers of those crypto companies. So if you like go through an exchange, you would like deposit money through that bank or withdraw through that bank, but you're a customer of Coinbase. You're not a customer of Silvergate. Like you and I are not customers of Silvergate.
Yeah, that's true. But it's like a corporate banking relationship.
Yeah.
So yeah, it's unclear how much contagion and exposure the industry has right now. Everyone's been pretty quick to come out and be like, we have minimal banking relations with Silvergate.
Yeah.
Like Circle, for example. They posted like, yeah, we had like a little bit of business to do with them, but we have minimal like residual business. But without like hard numbers, it's pretty scary.
Yeah.
Right? Like what if USDC actually is unbacked? This is a huge disadvantage of USDC relative to USDT now that you think about it. Right?
What do you mean?
Because if USDT has a shortfall and it is unbacked, there's not like a real strong way of us to ever know that. Right? Like it could go unknown.
Yeah, that's
like,
true.
Like whereas if it's fully like regulatorily compliant the way USDC is, like as soon as Silvergate goes bankrupt or whatever, like they, USDC becomes like unbacked effectively if they did have a lot of cash there. They're saying they don't, but we've heard that one before, right? Like we've heard that like, oh, we had a minimal amount of exposure to FTX, minimal amount of like assets on Genesis, right? Minimal amount of like impact from UST. Like we've heard this again and again, right?
Do you know how much like they are? Do you know how much they're, I guess, short?
Silvergate?
Yeah.
I don't know, but I think it's a lot.
I think it's a lot, yeah. For some reason, I'm thinking 1.7 billion. I don't know where I got that number from. It could literally be made up. But yeah,
that's not that lot. It's not that.
That doesn't
much,
seem like that much, but
yeah, we've seen worse.
Yeah.
I mean, we got the number from FTX this week. They say that it's like 8.9
billion,
which is smaller than I had expected.
Really?
Well, when they filed their like bankruptcy declaration, they checked the box for 10 to 100.
Yeah.
But they also did randomly find like in the couch like 500 million here, 500 million there. Yeah, the best take I saw on the Silvergate thing was someone tweeted my T-shirt that says I have minimum exposure to Silvergate Bank is raising a lot of questions that are already answered by the T-shirt.
Yeah, I don't know, man. Like somebody else is tweeting like, yeah, as a bank, like literally all you have to do is just sit there, collect all these deposits, and like make just a little bit of money on like short-term treasuries or like whatever, you know?
Yeah,
like
they should have been in shorter term stuff for sure, right?
Yeah.
Yeah, I mean, it's an interesting thing here, right? Where like that is, like their job is to push out on the risk curve as much as possible. That's sort of every financial institution's incentive. Like in 2008, right? It was just that like people's direct incentives were not to be like, you know, judicious with like their loan application process. Their incentive was to mint as many like you know, really shitty quality like mortgages as possible, to go as subprime as you possibly could get away with. And so like that just is the incentive as a bank, right? And as long as you're like in line with regulatory guidance, then you don't get called out on it in public.
Yeah.
And then there's no bank run. You know, a lot of it is social consensus. Right? Like any bank today would struggle with a bank run, I would imagine, right? Depending on how big it is. You know, USDC ostensibly holds nothing but short-term treasuries for this reason. Yeah, it's just interesting that like there's a bit of a double standard, right?
It is true.
It's like as soon as your bank in particular is like hit with a crisis of confidence, it's over.
Yeah. Huh. I guess you could say the same thing about the Fed, right? Like it goes all the way to the top, right? Yeah. As soon as you get hit with the crisis of confidence, like it's all over.
Yeah, I mean, I've said it before and I'll say it again. Capitalism is the ultimate Ponzi.
It's the true Ponzi. It's the long road to infinity. Okay. Yeah, so Silvergate, I guess we'll see like what the contagion looks like. I don't know. TBD. The market did sell off a little bit.
So it sold off in the span of like an hour, and it's really
interesting. It was a crazy wick.
It wasn't even like right as the announcement came. It was like 24 hours later or something.
Which makes me think it's unrelated. But who knows? The funniest thing, you know, Inverse Bra on Twitter. I forget if it was Inverse Bra or somebody else, but somebody related. They were like, "I found out the reason we dumped. It's the funniest one yet."
Wait, yeah, like, I did see that.
Yeah. I was like, damn. Now I have no idea. Justin's son bangs somebody's husband. I don't know. TBD.
Who knows? Yeah.
So, you have any other predictions on the market? Anything else interesting on what this sell-off could have been?
I'm trying to figure out how to play it, right? Like, almost every scenario, I basically just buy more ETH, right? Not financial advice. But here I'm wondering if the move is to buy like Silvergate calls or something.
Oh, they must be so cheap.
Yeah. And like, and then short the market.
Yeah. I mean, in a sense, like, if they file for bankruptcy, like, what would...
their calls expire out of money, right? But if they don't, or you know, even, let's say they file for bankruptcy, but it's like it seems like shareholders are going to get a little bit of value out of it.
Yeah, I was going to say if you like restructure in a way
on this thing is like 80%.
Yeah,
it's not like I've never seen anything like that. and well, maybe Peloton. And so like, yeah, if there's any kind of positive news, it's gonna pump. If there's any news that looks like there will be some residual value for shareholders, then like that's bullish, right? But if it's bullish and it starts to pump, like it's a clear short squeeze, right? But if that happens, I don't see the market pumping. I don't see Bitcoin pumping on news that like Silvergate's not as bad as expected.
Yeah. I don't see it pumping either. I see it in general, like I've been saying for a while. I think the market is cooked. I see it continue
You've been saying this for like over a year now.
I've been saying it for well, it has been cooked for over a year now.
Yeah, it's pretty good. Yeah.
I think it's gonna continue to stay cooked for a few months. I think we had a nice little fake bear market rally.
I like a good bear market rally.
Yeah. Everyone's enjoying for a bit. We had a Kanto season. Kanto is now dead today. Oh yeah, Kanto's dead. Happy Kanto Death Day. For anyone who doesn't know what we're talking about, listen to our Kanto deep dive. Okay, yeah, I don't know. I think the market will come back like later this year. I think everyone just enjoy until Christmas, and then Christmas maybe we'll have some pumps again.
Santa rally.
Yes, the Santa rally. Speaking of Santa, the new Succession trailer is out. They called him what do they call him? Evil Santa or something like that. Yeah,
that's pretty good.
Okay, last couple things here. The Shanghai upgrade has been delayed.
It has? I completely missed this.
Oh, did you? All right, well, let's look into it right now. On
let's go to Tim Bako.
Yeah, let's go to Tim Bako. But I know for sure it has been delayed. Wow. Shanghai upgrade is the one that will let people unstake their ETH, and it will be liquid again. I didn't really see why they
had an issue or two on some of the testnet like Shanghai forks, right? And this is like one of the few like other than the merge, this is like the only like EIP that like people like that just trade have been like looking at, right? Because it does substantially impact like the tokenomics of ETH, like what
how much liquidity there is,
the sheer just like liquidity impact. It's not like when the Shanghai fork goes through, it's not like you unlock all of the ETH at the same time. Like there are parameters in place. Right? Yeah, just because proof of stake, like the security of the network is entirely dependent on the amount that's staked, right? So if anytime you're messing with anything that's going to impact that, you have to be really careful. And so it's slowly. There's like a withdrawal queue, and if you look at like the like maximum amount that can get withdrawn at any time, it's still like a blip on the radar relative to the amount that was getting released to miners to pay them for mining. So it's obviously like that doesn't really matter when like every price right now is just purely social consensus. That's the question is like, what does this do to the ETH price?
The delay itself, or just the upgrade?
The upgrade. Well, so the delay is just bearish on all accounts, right? Because it reminds people that this is coming.
Exactly.
And
both things. Yeah, it reminds people that it's coming and that it's not fully there yet.
I think overall, I think ETH will pump into the news actually, and then I think they will sell off immediately after the fork. And I don't think much of that sell-off will be caused by withdrawals. I think it'll just be like the market anticipating like sellers. But I do think that over the course, I think it'll take it like less than a month to have more ETH staked post Shanghai than was there pre Shanghai.
Interesting.
Yeah.
Just because people will see that it works and it's just validation.
People see that it works, and also like you have a lot of people out there that are thinking right now like, I would love to stake my ETH, but this is a good example of like, I don't know when I'm going to be able to unstake it.
Yeah, exactly. So that
if I might have to pay back my investors or something, like I can't underwrite the risk that like this doesn't happen before that. So as a responsible like capital allocator, I can't actually like stake any ETH right now, right?
Yeah.
And then also like a lot of the like liquidity demand does have access to liquid staking tokens. They've had it for a long time, and even like Coinbase ETH, right? Like that effectively unlocks liquidity for every retail staker on Coinbase, and Coinbase is a massive staker.
Yeah.
So I think overall like the demand for ETH staking is going to be like really high, and I think most of the ETH in the ecosystem winds up getting staked.
Yeah. Totally see that. Okay, what do you think happens to the price of all the LSD tokens after Shanghai?
The governance tokens?
Yeah, like Lido, Rocket Pool.
So Lido's token is purely a governance token, right?
Yeah.
So I think it pumps.
It does nothing, so it will pump.
Yeah, of course, man. I mean, Lido is at ETH Denver. The amount of talk that I heard about Lido and the amount of like just general brand awareness is through the roof. Everyone's wearing Lido swag, and it's like sought after Lido swag, right? I mean, they have hats that say LSD on them. How cool is that?
That is great.
Moreover, I'm talking to people that work at Lido. Never heard that before. And they're exploring ways to partner with other ecosystem participants, and it's the biggest one, and so it's the least likely to fail. It's too big to fail. Lido is too big to fail at this point. Rocket Pool token is an interesting one because we covered this in our liquid staking deep dive, but if you want to start a Rocket Pool validator and put up 16th and then get your 16th matched, you have to put up some amount of this token.
Of RPO.
It is a utility token as well, right? And you put that up to collateralize in case you like fuck up your validator and like get slashed or like leak a value or whatever, like stop validating blocks. And so this is nice because as the number of Rocket Pool validators grows, the demand for Rocket Pool token also grows. The issue is that like it's also getting printed to incentivize people to use Rocket Pool, so it's not super clear like what level of like Rocket Pool growth is required to sustain the tokenomics there.
I see.
But I think that one is a slow burn up. I think Lido pumps. Well, I don't know. Rocket Pool is also less liquid, so maybe it pumps more. But there's bullish on all LSDs. Yeah, super bullish all LSDs. Frax is the one that I don't know enough about that we should look into.
Frax deep dive is actually pretty relevant.
Yeah, Frax, they have a stable. They have this like FPI thing where.
Yeah, I saw that. I don't know anything about it.
It's like a Frax token that's meant to like track the price of like or the value of a dollar, including inflation.
Oh, that's cool.
Yeah. So it's like tips, right? But with Frax. Very bullish for Shanghai. Tough to see the delay, but it's no one's complaining that like the thing that like everyone is perceiving as bearish has been pushed back a couple of days,
exactly.
Right?
I know.
It was slated for like 10 days from today, and it's getting pushed back like a month or something.
I think it's gonna be mid-April, late April, something.
Yeah.
Okay, that's basically all we had. You want to hit anything else?
No. Fingers crossed the Silvergate thing isn't a huge deal.
Yeah.
And keep building.
Keep building. Enjoy the last couple days of ETH Denver for whoever's there. We'll be back on Tuesday with our latest deep dive. This has been a live episode of the podcast. We'll be back. Have a great weekend, everybody. And until next time, stay decent.
None of this was financial advice, legal advice, investment advice, or any other kind of advice. If you're looking for advice, you are definitely in the wrong place. Until next time, stay decent.